So, you're a Georgia resident with a Path to College 529 plan. First off, great job. You've already made a really smart move for your family's future. But as that future gets a little closer, you might start to wonder, just how flexible is this thing really? Are my savings kind of locked into Georgia? Well, let's clear up some of the biggest questions and unlock the full potential of your 529.
Does this scenario sound a little familiar? I bet it does. You started saving early, which is fantastic, but now the future is actually coming into focus. Your kid's looking at schools all over the country, maybe even abroad, and then it hits you. Is our Georgia-based plan the right one for a non-Georgia education? It's a really common question.
Well, here's the good news. Your Georgia 529 plan has some hidden powers you probably don't even know about. It is way more flexible than the name might make you think. So let's just dive right in and bust the single biggest myth that holds people back.
Let's just get this out of the way nice and clear. Your money is not trapped in Georgia. You absolutely are not penalized if your child's dreams take them right out of the Peach State. That name, Path to College, it's about a path to any college, not just one in Georgia.
And when I say any, the scope here is huge. We're talking about eligible schools in all 50 states. We're talking about tons of private universities. And yeah, even certain international schools. This covers all those qualified expenses like tuition, fees, and even room and board. So whether your kid chooses UGA or a university on the West Coast, your savings are going to follow them.
The flexibility doesn't stop with geography either, not even close. You see, the whole definition of qualified expenses has gotten a lot bigger in recent years, which makes your 529 plan more versatile than ever. And honestly, this is a real game changer because it recognizes that a great education isn't always a 4-year university degree.
I mean, just look at how versatile these savings have become. You can use up to $10 grand a year for private K-12 tuition. It can help fund trade school through approved apprenticeship programs. You can even use it to pay down up to a lifetime total of $10,000 in student loans. The big takeaway here is that this thing has evolved from just a simple college fund into a really comprehensive education savings plan.
Okay, so your plan is portable. We've established that. But that brings up the next logical question, right? Should you move it? If you happen to find another state's plan with, say, lower fees, is it a no-brainer to just switch? Well, not so fast. This is where you face a pretty major trade-off, and it all comes down to taxes.
It's definitely a tempting thought. I get it. You're a smart saver, and you spot another state's 529 plan with lower management fees or maybe some investment options that you really like. And yeah, the IRS does let you roll your funds over to another state's plan once every 12 months. But before you jump on that, you have to weigh the pros and cons very carefully. So here's the core dilemma. On one side, you've got the potential for maybe lower fees or different investment choices in another state's plan, but on the other side, you have the risk of giving up those valuable Georgia state tax deductions you've already taken. So, what exactly is this risk? It's this concept called tax recapture. Think of it like this. Georgia gave you a tax break as an incentive, right? An incentive to save in their plan. If you turn around and roll that money into, say, Florida's plan, Georgia can basically say, hey, since you're not using our plan anymore, we want that tax break back. And that could mean you end up owing state income taxes on all the contributions you've deducted over the years.
And listen, we are not talking about small change here. For 2025, married couples filing jointly in Georgia can deduct up to $8,000 in contributions per beneficiary. For single filers, it's $4,000. Now, if you've been contributing and claiming that deduction for years, the amount Georgia could recapture might easily outweigh the benefits of a slightly lower fee in some other plan.
All right, let's tackle another super common worry. What happens if life throws you a curveball? What if your child gets a full scholarship, which would be amazing, or maybe just decides college isn't for them? Is all that money you saved now stuck? The answer is a big, resounding no. Your 529 plan is built to be a long-term asset for your entire family.
And this is such a huge relief. The money you've worked so hard to save doesn't just disappear if the original plan changes. That account is an asset that belongs to you, the owner, not the beneficiary. And because of that, you have some fantastic options.
You can just change the beneficiary to another eligible family member completely tax-free. I mean, think about the possibilities here. You can pass it down to a younger sibling or maybe a grandchild someday. You could use it for a niece or nephew. You could even use it for yourself if you decide to go back to school for a new degree. This totally transforms it from a single kid's college fund into a true family education asset that can literally span generations.
So, we've busted the myths, we've weighed the trade-offs. Now, let's turn all this knowledge into action. Here's a simple 3-step plan to help you figure out what's really best for your family's 529.
Okay, here it is. Step 1. Compare. Go ahead and look at other state plans. Check out their expense ratios and their investment options. Is there a truly compelling reason to switch? Step 2. Calculate. Add up the value of your past Georgia tax deductions. That number is what you're putting at risk with that tax recapture we talked about. And finally, step 3. Align. Think about your family's real goals. Is K-12 tuition a priority? Are you saving for multiple kids? Your strategy should be driven by your unique situation, not just by chasing the lowest fees.
You know, ultimately, it all comes down to this. Education and careers, they're just not a straight line anymore. They're dynamic. Your savings plan needs to be just as adaptable as your child's ambitions. By understanding these key features of your Georgia 529, you can make sure your plan isn't just a savings account, but a powerful tool that's ready for whatever path your family chooses to take.